Thank you for being here with me tonight. I don't know where you're watching this from. You might be winding down after work. Maybe you're scrolling through financial news in bed. Maybe you just stumbled across this video because the words Japanese stocks or politics or 5yen shinaryo caught your eye. Wherever you are, let's take a deep breath together because tonight we're going to cut through the noise. Not the headline noise, not the social media noise, not the political theater that trends for 12 hours and then disappears. I'm talking about the deeper current, the underlying force that moves money, shifts sentiment, and quietly plants the seeds for the next rally that catches everyone off guard. You've heard the names already. Takaichi, Tamaki, maybe even the unexpected scenario of Saito or Noda stepping into the frame. You've seen the headlines: coalition collapse, Komeito withdraws, risk sentiment deteriorates, Nikkei plunges 1,200 points. And abroad, the usual chaos unfolds. Trump threatens tariffs, the market panics, and then like clockwork, he walks it back. Taco, they call it. Trump always chickens out. A strong word, a hard reversal, a market whipsaw. Investors gasp, algos go haywire. Financial commentators get their thumbnails ready for YouTube. You know the drill. But here's my promise to you. Tonight, I'm not going to spoon-feed you surface-level commentary. We're going to do something else. We're going to walk through the chaos, slow down the moving parts, put politics and macro and sector rotations on the same table, and look at them with calm eyes. Because when everyone else is shaking their head and saying the market is too noisy, that is exactly when you need clarity the most. Let's start from the only question that actually matters right now. Not who becomes prime minister. Not will the coalition survive. Not even will the Nikkei recover next week. No. The real question is simpler and much more powerful. Which policy direction survives the noise? Because leaders come and go. Narratives rise and fall. But once a policy direction embeds itself into the bloodstream of an economy, once capital expenditure starts flowing, once research budgets are approved, once semiconductor foundries start laying concrete, that momentum does not reverse just because an election shifts a few chairs in the diet. So let's go back to that moment. Holiday break ends, market reopens. First tick of the Nikkei shows red, and then it accelerates. Minus 200, minus 500, minus 800. Commentators wake up, notifications go out. Nikkei down more than 1,000 points for the first time since, you know the tone. Panic dressed up as analysis. And yet, beneath the surface, something interesting is happening. Smart money, money that doesn't care about Twitter, starts watching. Because a pullback fueled by politics is very different from a pullback triggered by earnings deterioration. One is noise, the other is signal. And in markets, distinguishing between noise and signal is everything. Some people asked me recently, does this political turmoil invalidate the 50,000 Nikkei scenario? And I looked them in the eye and said, only if you believe Japan's earnings strength was a hallucination. EPS, earnings per share, does not care about coalition drama. A semiconductor plant does not pause construction because of a soundbite. Sony doesn't cancel R&D because a coalition partner released a press statement. These things are deeper. Numbers like 2,550 yen EPS this year and potentially 2,700 next year, that's not political sentiment. That's corporate muscle. And corporate muscle doesn't evaporate because a headline flashes for 48 hours. But let's step back. Why is everyone so obsessed with who sits in the prime minister's chair? It's simple. Not because of personality, though the media loves that angle. No, it's because markets are trying to price policy continuity. Takaichi signals continuity with a twist. Sanenomics, a version of growth investment that extends Abenomics but aims at Japan's supply capacity. She's not just talking about easy money. She's talking about national resilience, startups, nuclear fusion, securing communication cables undersea, semiconductor sovereignty. She's speaking the language of strategic capital allocation, and markets understand that language. Tamaki, on the other hand, comes from another direction: household relief, disposable income expansion, consumption-based reinforcement. He says, reduce consumption tax on essentials, ease social security burdens, let households breathe. You might think these two candidates are far apart, but look closely beneath the rhetoric, and you will find something remarkable. They both assume active fiscal stance as a foundation. Whether it's through growth investment or income redistribution, both frameworks rely on fiscal leverage to catalyze economic momentum. And that, right there, is what the market is anchoring to. So when you see the Nikkei fall 1,200 points, remember, that is not the market abandoning the growth narrative. That is the market performing a stress test. It's asking, is the policy foundation still intact, or are we heading into paralysis? And as long as the answer remains that fiscal engines will continue supporting either growth sectors or household demand, then the spine of the market rally remains unbroken. Now, let me take you to a scenario that many people fear, but few articulate clearly. Imagine a fragmented coalition scenario, a temporary administration with weak mandate and blurred priorities. Maybe even someone like Saito from Komeito stepping into a caretaker role, or a compromise candidate from the opposition bloc. Markets, especially foreign funds, look at that and ask, where is the vector? Where is the directional force? Because policy without vector is just noise. And investors do not price noise. They step back, raise cash levels, and wait. But here's something important. That waiting period, that hesitation, that cooling phase, that is not the enemy of long-term investors. That is oxygen. Because rallies need oxygen pauses. A market that only goes up becomes fragile. A market that breathes, rises, pauses, corrects, consolidates, becomes durable. And in that sense, what happened on the 14th was less of a collapse and more of a deep breath. And if you've lived through enough cycles, you can almost feel it. Beneath the surface panic, there is a quiet recalibration going on. And now I want to talk about sectors. Because yes, politics is dramatic. Yes, personalities attract views, but portfolios are built on sectors, not headlines. And sectors are driven by policies, not personalities. You want to see where Japan's next wave comes from. Look at the policy intersections, where growth investment meets national interest. That's where capital will flow. Let's talk about next-generation energy. Nuclear restart is one piece, but look beyond that. Fusion research networks, perovskite solar innovations, grid storage solutions that connect renewable capacity to real industrial usage. These are not future dream sectors anymore. Budgets are approved, demonstration plants are underway. International partnerships with Europe and the US are forming. This is not rhetoric, this is capital circulation. And capital circulation changes earnings landscapes. Let's talk about semiconductor sovereignty. The world learned something after the chip shortages. Supply chains are geopolitical now. Undersea cables are geopolitical. Cyber defense is geopolitical. And when something becomes geopolitical, government funding becomes not just available, but strategically inevitable. Look at the US, CHIPS Act. Look at Europe, their version of strategic autonomy funding. And Japan? Japan is quietly moving in the same direction, with a distinctly Japanese approach. Careful, maybe slow on the surface, but deeply committed once the decision is made. That is why things like Rapidus, once mocked as too ambitious, are now drawing serious attention. Let's talk about internal demand and household support. Childcare support, tax credits for caregivers, consumption tax reductions on essentials, incentives for household technology adoption. People underestimate household economics as an investment theme. But in a low-birth, high-aging society, consumption patterns become highly predictable once fiscal supports are embedded. Predictable consumption plus stable fiscal subsidies equals resilient domestic sectors. And when foreign investors realize that Japanese domestic demand can be engineered to stabilize through structured support, those sectors stop being ignored. And then there's something more subtle, corporate governance transformation. This is not tied to any one politician. It started earlier, during the governance code updates, the push for ROE visibility, the demand for cross-shareholding reduction. But something new is happening. Dividend commitments are becoming structural. Buybacks are no longer temporary. DOE, dividends on equity, is entering the language of management meetings. Once that enters management vocabulary, it rarely leaves. And when capital return culture becomes structural, market baselines shift. High PER becomes sustainable, not because of speculation, but because of structural capital discipline. And here's something you should internalize. Japan's market is transitioning from episodic rallies to structural re-rating. That's a big deal. Episodic rallies are emotional. Structural re-ratings are institutional. Episodic rallies spark YouTube thumbnails. Structural re-ratings shift pension fund allocations. You want to know where the big money goes? Follow the policies that become infrastructure. Follow the earnings that become predictable. Follow the dividends that become habitual. That is structural re-rating. And that brings me back to EPS and PAR. Numbers that sound mechanical but contain deep narrative power. EPS tells you about muscle. PR tells you about faith. One measures what companies have earned. The other measures what investors believe those earnings are worth. You need both for a bull market. And right now, Japan has the muscle. The only question is whether it retains the faith. Political noise can shake faith in the short term. But if policy direction remains intact, faith returns. And when faith returns to a market with muscle, you get liftoff. Now, some people say, isn't this just like Abenomics again? Easy money, fiscal noise, hope marketing? And I say no, there's a critical difference. Abenomics was about shocking the system. The next phase, call it Saneonomics or Tamaki-style fiscal redistribution, is about wiring new circuits into the system. It's not adrenaline, it's muscle fiber remodeling. And muscle fiber remodeling takes time, but once it's done, performance jumps permanently. Let's pause for a moment. Think about the last 2 decades. Japan was efficient, disciplined, export-driven, but it also held back. Fear of debt, fear of failure, fear of being too bold. But something is shifting. Youth startups are increasing. Energy policy debates are becoming more pragmatic. Companies are no longer hoarding cash, they're deploying. This is cultural momentum. And cultural momentum, once it aligns with fiscal policy, creates economic inflection. So where does this leave us? You have political noise, yes. You have correction phases, yes. But beneath that, you have structural capital investment, structural earnings improvement, structural dividend culture, structural fiscal willingness. That is why many serious investors, people who don't tweet, people who don't go on TV, still quietly maintain the 50,000 Nikkei scenario, not as hype, not as a thumbnail, but as a baseline. And here's the beautiful irony. Political chaos might actually accelerate the rally if the chaos filters out weak hands. Markets reward conviction. And conviction is forged during noise, not during calm. When everyone is comfortable, conviction is meaningless. When everyone is nervous, conviction is priceless. And that's where you need to be, on the side of conviction. Now, as I say that, I want to talk directly to you. Because you're still here. You didn't click away after 30 seconds. You're not just hunting for dopamine. You're looking for a compass, something that points beyond headlines. And that's rare. Most people only hear the siren of the moment. You're choosing to understand the movement beneath the moment. And that mindset, that long view mentality, is exactly what aligns with where Japan is heading right now. So let's talk about what happens after this cooling phase. You will see capital re-enter strategic sectors. You will see resumed upward pressure on semiconductor plays, on defense communications, on energy infrastructure. You will see household relief names gain floor stability, and you will see governance-linked high dividend names continue steady accumulation from overseas pension flows. One by one, sector by sector, quiet accumulation will form the bedrock. And then, when political clarity returns, even slightly, you will see lift. And that lift will look sudden. But you will know it wasn't sudden at all. It was building here in the quiet accumulation phase, in the phase where headlines shout but capital whispers. And remember this, the market doesn't reward who predicts the next prime minister. It rewards those who understand which policies survive regardless of the prime minister. That's the key. Politics changes actors. Policy changes trajectories, and trajectories build markets. As we head into that phase, ask yourself, are you aligning with noise or with trajectory? Because trajectory is built in corporate budgets already submitted. It is built in research labs already hiring. It is built in defense contracts already negotiated quietly in back rooms. It is built in dividend policy memos already drafted. These things don't show up in headline cycles. They show up in earnings seasons. And earnings seasons don't wait for coalition drama to settle. So let the headlines roar for a while. Let the Nikkei cool. Let volatility rise, because volatility is only dangerous for those without a framework. With a framework, volatility becomes entry, and political theater becomes opportunity. And Japan's next phase, the 5-ion phase, is not a parabolic fantasy. It is a structural phase shift, and you are watching it form right now, in real time, beneath the noise. And when that moment comes, when the noise fades and the trajectory becomes visible to everyone, you will not be surprised, because you were here. Because you listened not to the storm, but to the current beneath it, and that current is moving forward. Thank you for staying with me tonight. The world is loud, but clarity always belongs to those who choose to look deeper. Stay calm, stay analytical. Watch policy, not headlines. Watch capital flow, not political sound bites. And remember, no matter who steps in front of the cameras next week, the machinery of investment, innovation, and corporate evolution continues to turn, and that machine does not stop. Good night, and see you in the next session.